Hello folks, this is Rich Prout from Stonehearth Capital Management with your October 2015 Economic Update. First, I'd like to announce that on Thursday, December 3rd from 5:30 to 7:30 p.m. we'll be hosting our holiday celebration at our office with drinks, hors d'oeuvres, and entertainment by magician and mentalist David Hall. We are very excited about this event and look forward to seeing you all there. In this month's video, we'll talk about some of the economic events that influenced markets last month and give you some insight into what that might mean for you as an investor. Please stay tuned at the end for a required disclosure statement. October was generally a good month for stocks as they recovered some ground after a turbulent September. Let's take a look at a few of last month's major events. Third quarter earnings season kicked off in October, and the news is pretty lackluster. Out of 253 S&P 500 firms that had reported in, profits were up just 2.4%, while revenues were down slightly by 1.4% over third quarter 2014. What does that tell us? Well, it tells us that U.S. companies are still dealing with a lot of headwinds from issues like weak global growth, a strong dollar, and volatile oil prices. Now keep in mind that these are overall results. If we exclude the struggling energy sector, total earnings would be 4.7% on 1.3% higher revenues. There are also a lot of individual success stories from companies that have achieved great results despite the challenges. As financial professionals, our job is to help our clients find the success stories. In other news, the Federal Reserve's Open Market Committee met again in October and surprised no one when it voted to hold rates stable. However, the official statement told investors to hold on to their hats because a rate hike might come as early as December if the economy stays strong. But our first look at third quarter economic growth showed that gross domestic product grew a paltry 1.5%. Now, this is just a preliminary report, and economists will revise the data several more times. However, we can see that growth slowed sharply as U.S. businesses cut back on restocking their warehouses. Will weak growth cause the Fed to hold back on rate hikes this year? Very possible. However, many economists expect growth to pick up again in the fourth quarter, giving the underlying strength in the U.S. economy. So it could come down to a coin toss for the Fed. We'll keep you updated. Please remember that nothing we talk about here is a recommendation. If you'd like to discuss your personal financial situation, please give us a call at 978-624-3000. We'd be happy to talk with you. Thank you.